If you're holding XRP right now, you're probably feeling a bit nervous seeing it dance around that crucial $1 mark. But here's the thing. The AI models are telling us something really interesting about what might happen next. Let's break it down. So here's where we are right now. XRP is sitting at $0.9993, down about 0.45% in the last 24 hours. Now, I know that doesn't sound exciting, but you know what I've noticed? We're literally right at that psychological $1 level where all the magic happens. It's like standing at a crossroads, and the market is deciding which way to go next. Here's why this number matters. The RSI is at 34.84, which means we're getting close to oversold territory. That's usually when the smart money starts paying attention. Plus, we're trading near the lower Bollinger band at $0.9867. In my experience watching these charts, that's often where bounces begin. The MACD is still bearish at -0.0250, but the momentum is weakening, which could signal a reversal coming. Now this is interesting. While there wasn't one big news event today, the correlations tell us everything we need to know. XRP has a negative 0.86 correlation with the S&P 500 right now. What does that mean for you? Well, when stocks go up, money tends to flow out of crypto. It's like a seesaw effect that we need to watch carefully. On the regulatory front, things are pretty quiet today. The ETF trend index is at 15, which is relatively low. But here's what caught my attention. XRP ETFs saw $12.3 million in net outflows recently. That tells me institutions are still being cautious, waiting to see what happens next. Sometimes that creates opportunity for us smaller investors. The mood right now is, well, let's just say people are worried. The Fear and Greed Index is sitting at 34, which puts us in fear territory. XRP search trends are also low at 34. You know what I've learned? When everyone's scared and not talking about something, that's often when the best opportunities show up. The big players are doing something interesting. We're seeing 669 daily transactions. But here's the kicker. Whale transactions make up nearly 100% of the volume at 499.7 billion XRP. That's a lot of big money moving around. This could mean volatility in the short term, but it also means there's serious liquidity when we need it. In plain English, we're at this stage. The Elliott Wave analysis suggests we're in wave C of a correction, which typically means we're near the end of the downtrend. The Wyckoff method shows we're in what they call the markdown phase, stage B. Basically, this is often where the sellers get exhausted and buyers start stepping in. So what does the AI think? Well, this is where it gets exciting. The AI ensemble model is predicting $1.5983 in the short term. That's almost 60% upside from here. The confidence level? 90.9% probability of going up. For the medium term, we're looking at $1.5096 with 98.2% upward probability. Even the long-term target of $1.3305 represents over 33% gains. But here's what could go wrong. We're still trading below all the major moving averages, which isn't great. If the dollar gets stronger, that negative correlation could hurt us. And those whale movements I mentioned? They could dump and create some nasty drops if we're not careful. Here's my take on this. I'm leaning toward gradual accumulation. The technical indicators are showing oversold bounce signals, and those AI predictions are pretty compelling. Here's what I do. Primary entry between 95 cents and $1. If it drops more, secondary entry at 90 cents to 95 cents. Set your stop loss at 85 cents on a daily close. First target, $1.35 for about 35% profit. Ambitious target at $1.55 for 55% gains. The key here is dollar cost averaging because of that whale activity. That's it for today. The setup looks promising, but remember, I'm just looking at the AI data and charts, not giving financial advice. If this helped you understand what's happening with XRP, hit that subscribe button and give it a like. See you next time.